Welcome everybody to the closing bell here at MarketStream.live. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. Wrapping up what has been a very interesting day, to say the least. Well, taking a look at the markets, and we've been looking at these all day, but I said this morning and at Strategy Now before the market took a turn. Watch the small caps. The small caps are the canary in the coal mine. They've been lagging and were lagging all session. The Fed minutes came out, profit taking kicked in. Whether or not that's the pure catalyst at this juncture, we just saw that domestic policies that the market was anticipating post-election aren't being put into motion at this juncture fast enough to validate the move that we've seen in the markets and again, at this juncture. With that being said, taking a look at the Dow Jones, finished the day down 41 at 20,680. Now, to take a look at this, let's look at the after hours, and I'm going to take a look at the diamonds. Taking a look at the DIA, the diamonds right now are trading up a penny at 206.27. We're going to watch these levels because now these major indices and these ETFs are all in ranges right now where they're back in the battle zones. The S&P 500 pulled back, and if you take a look at the SPY, so you had the SPX down, you have the SPY down post after hours, down another 22 cents at 234.56. Again, in this battle zone between the 20 and 50-day moving average. This means that the short-term bulls are on the heels and the intermediate-term bulls could be potentially challenged. And again, we have an economic report that's coming out at the end of the week, non-farm payrolls and the employment number. Those could potentially move the market. Taking a look at the NASDAQ. And again, folks, just to give you an idea, this morning, as we discussed in What's Hot Now, the ADP report came out, over 230,000 new jobs, 260,000 new jobs were created. And that was off the charts as far as expectations, right around 160,000, what was expected. The market took that in stride. It didn't immediately jump, but then it started to grind higher. And then in the afternoon, we had the Fed minutes come out. And the discussions that came through, there were some dissensions about raising rates. The Fed governors have been talking to the public way too much. As a matter of fact, we had a Fed governor, I believe it was the Fed governor from Minnesota, actually resign before he was going to retire at the end of the year because he had to divulge that he had spoken and disseminated in 2012 non-public information to a reporter. Now, the point being here is that there is some potential volatility on the forefront, and we're seeing that action right now. The NASDAQ, what's very interesting about the NASDAQ, we saw the NASDAQ do something that we have never seen in the history of this index. It hit a new all-time high. As a matter of fact, today it traded at $5,479.90. That is an all-time record high. So we're seeing that the market is challenging and setting these highs up here in that 54.70 range, but it's not getting that momentum to the upside. As a matter of fact, you saw some weakness in Apple and some other large cap techs. Now, I'm not saying that large cap tech is something that you want to start shorting, but what I am saying is that watch out for some potential short-term bulls to be put on notice and actually have to start fighting here at this 20-day moving average. And that's the NASDAQ. Now, taking a look at the Russell 2000, this is my canary in the coal mine, folks. This pulled back immediately right as the Fed minutes were being released and digested. The Russell just pulled off. That basically dragged the rest of the market down, and the Russell was lagging all day, to say the least. Now they're in a battle to stay above that 1350, 1340 level. This is going to be the challenge level that you're going to want to watch on the Russell 2000. These small caps, domestically centric stocks that I discuss all of the time, they're sensitive to all of these headlines that are coming out about infrastructure plays, right? XLI was down today. Also watch the consumer. Is the consumer still as strong as we anticipate or have been seeing some of the numbers coming out, both in retail sales as well as projections with PMIs and so forth as far as growth? Again, a lot of moving parts here, but the market is digesting this, and what was a very impressive move was in volatility. coming off of the lows of the day. It was trading as low as 11. Let's see, it traded 1090. And then bounced off right after that, got as high as 1290, where it basically finished the day. We're going to watch volatility going into that non-farm. Let's see if they start raising it before we get non-farm. The dollar was strong most of this week. It actually was strong against most currencies. It was holding up above that 100 level after dipping below late last week, and early this week it started to bounce. We started to see the strength while the dollar pulled off towards the end of the day, but that did not help the crude markets. The crude markets had another bearish blow. Again, a larger than expected build in Cushing, over 1.5 million barrels now additionally being stored. So there wasn't a draw, there was a build. That's negative for crude at this juncture, especially when we have the mixed signals coming out as far as policy and expectations going forward, not only here in the United States, but globally. Even though we see the PMIs, we have to see the reality of the fact, which is they're really seeing the growth that they're anticipating and measuring right now. Finally, taking a look at the treasuries, treasury prices popped considerably. The 2-year came up, trading off of its best levels today. The 10-year popped, trading off of its best levels today. And the 30-year. All pricing to the upside. That means if you see bond prices going up, that's going to bring yields down. Folks, that means that financials are going to come under pressure. And we saw that. We've seen the action in Goldman Sachs, Morgan Stanley, JP Morgan, the big banks. Also watch the regionals. These are more domestically centric. We saw some activity in the housing side, specifically real estate, where there was actually some big weekly put options being purchased slightly in the money at this juncture in IYR. Let's actually take a look. We talked about that this morning. Also, and in Strategy Now, IYR finished the day trading at 78.52 at basically its worst levels. Now it's bouncing after hours at 78.56, as you can see here. But the bottom line is that and the real estate index ETF, we saw the 79 puts trading. This is going to be some interesting action. We're going to keep an eye on this. They are expiring on Friday. Let's see what that strategist did. We saw about 1,200 of those trade. All right, folks, that is it right now for the closing bell. Join me tomorrow morning. I'm going to go over all the action in Asia. Let's see if that overnight session really starts to pick up as far as movement and volatility. We've seen some strength in China and Hong Kong, mixed action in Japan. So we're going to watch this very closely in the overnight. See you then.